Welcome back, you beautiful people, to the Real Podcast. It is 2024. We're going to take a look back at what happened in 2023, what we noticed, what the trends were. As always, hit that like button, subscribe to the channel, share this with someone who you think might like what we're talking about today. You can also listen on Spotify, Apple Podcasts, and if you'd like to schedule an appointment with Kyle or I, you can do it in the calendar links below. Or if you just like to download a buyer or seller guide, you can get those links below. Special thanks today to our sponsor, Magic Mind. More about them later. But we're getting into 2024. This is the first podcast of 2024. We figured we'd take a look back at 2023 and get into it. Kyle, how was your New Year's? How are you feeling? What's going on in your world? Did you have any resolutions, or do you have a word of the year that you have as something you're doing?
New Year's was good, low key. Yeah, definitely low key this year, which is always nice, I think. And no real resolutions. I'm not the resolution guy. I think I'm always trying to do the same thing, which sounds super cheesy, but it's like I just want to be better. So yeah, I'm working on that. But I think if there was a word, actually, I think it's gonna be consistency is definitely what I'm looking to do, business wise, anyways, and personally, but consistency with my clients and keeping in touch more and um, being available, like consistently talking to them a lot more about what's going on, because I think that's as a segue, that's what's going to need to happen over the next year to 2 years is consistently being in contact with clients to make sure that everything is okay. Because it's going to be different out there for sure.
Absolutely. It is. I think people have said that their expectation is that 2024 is going to be a rebound year.
Hmm.
2023, just, I mean, overarching sort of analysis of it, buyer sentiment was the lowest that it's been in a long time. There's an email that I just got from someone who's in your mastermind group, actually, and it's had like a trend of like where the buyer sentiment was and how low it was. Right? Everybody's like, oh, the rates are too high, the prices have to come down. I will wait. And that was like the objection to overcome for realtors in 2023. Hey, I think this is going to get worse. I'm going to wait. And not a lot of people have. What do you do? You're going to make someone do. You're going to make someone buy a $600,000 thing. Most agents are not that good salespeople and don't want to be. So, 2023 was a slow year. If you look at the overall number of transactions, way lower than anything that we've seen in the last 10 years, right? Like we haven't seen number of sales under 12,000. I've never seen that in my whole career in 10 years, right? I started in 20.
Wow.
That's, yeah, the lowest number of transactions on MLS that we've seen in at least a decade. So
Hmm.
that's significant, which means a couple things. We're gonna have some pent up demand, I think. Right? There's gonna be some people who didn't move, who still needed to move, who say, okay, yeah, let's do it. I'm in, right? Yeah, so it's going to be very interesting to see what happens this year. I don't think the prices are going to shoot up like they did. I don't think they're going to drop. I think there's going to be an inverse correlation between the rates coming down. And I just read something that said originally they were expecting the rates to come down in 2024 by three-quarters of a point in total by the end of the year. I just read something that said now they're projecting more like maybe a point and a quarter by the end of the year. So who knows?
Yeah, and people want to be careful with those statements too, and reading into that, because again, that's not the fixed rates.
Right.
That is essentially that's the prime rate. So if they're going to drop prime, now they do affect each other, just not directly,
Yeah.
right? So if they do drop prime by a full point, um, that's going to be I mean, any drop is going to be great, but by a full point would be wild,
I,
for sure would be wild. But we're already seeing it. I'm at a conference right now, and we have some of our lenders here, and the market is obviously predicting the same thing, because one of our lenders just dropped their standard product. Like there's no strings attached to this; it's their regular product. 5-year fix is down to 4.89 as of today. So we haven't seen that in over a year, and that in itself could be interesting to see the mentality that people will have seeing a rate start with a 4. For
I,
sure.
I think there's so much tied between Bank of Canada rate announcements and buyer sentiment. Whether or not most buyers are actually going to go out and get themselves a variable, they're not. They're gonna get a fixed, right? People want that consistency. Most people are like, yeah, I'll take the 3 or the 5 year fix, and there's a definite correlation between buyers thinking, hey, this is a good time to buy, and the Bank of Canada saying, hey, we're not going to put the rates up, right? The variable rates. So, yeah, it's very much an interesting time to see what's going to play out. I'm really coaching my buyers right now, saying, hey, look, if you're on the fence about buying, like get it done sooner in the year, like start now, buy now, because I don't think it's going to get any better if you wait until the springtime, right? You've always made that comment. You and your 10 friends are all going to be bidding on the same,
Yeah.
right? So, my word for the year, since you asked, I will tell you,
Sorry.
is radical,
Oh, going back to the 90s.
right? But
Ninja Turtles.
check this out. Check this out. Radical is actually spelled Radicle. And what that is, right? Exactly. Not CAL, right? Radical CAL is the word from the 90s. We're like, yeah, it's rad, man. I picked the word specifically because it has that instant idea where you think of like, oh, this is something that's radical. Like put your hat on backwards, ride your skateboard, Bart Simpson, radical. That's what's evoked, right? When I say that. But what a radical is that tap root, is that first root that goes all the way down as deep as possible into the ground.
Look at you. Look
Right?
at you.
So I went in on this. And so my idea is I want to get deep. I want to get into it. I want to get back to the important stuff. And I want to go deep down into feelings. I want to go deep down into the important stuff. You know, thinking about like roots, right? The roots. What are my roots? Get back to, deepening and strengthening my relationship with my family, deepening and strengthening my relationship with myself, get back to basics, back to, and not just surface level stuff, like down, all the way down, the furthest down possible. And in myself. So that's my word for 2024. This is recorded. So I'll be able to look back at it and say, hey, did you do it? Were you radical in 2024?
I
So
feel like I should have a better word now after you went so heavy.
I told you I went in on it, right?
Yeah, he went deep. That's good.
Literally.
Yeah, literally. Yeah, literally. Pun intended. Pun intended.
I was challenged. I was challenged by my wife. She's like, you got to get a word. You got to get a good word. And I bounced around. I had a few different things. I was like, oh, I'm gonna let it be. I'm gonna, let or be, or She's like, all of that's apathetic. So yeah, she gave me the idea of roots, and I went in on it. So that is my word for 2024. If you want to have a deep, radical conversation, hit up your boy. That's me.
There you go.
So getting deep, getting into the roots, getting all the way down to it in terms of work looks like getting real with clients, having the real conversations with clients. Met a client yesterday at a house. We were talking about like the real stuff, not just the fluff, but the real stuff. I think it's important to deepen the relationships that way. So that's my word, man. That's my word. That's what I'm up to. So
Good. We'll keep you accountable to it.
I will keep you accountable to your consistency.
Perfect. Perfect.
I think that's good. I think doing these podcasts, once a week, that's an absolute exercise in consistency.
It's true. It's very true. When you were talking about, just because it came to my mind, when you were talking about, projecting into 2024, like I said, I'm at a conference right now, and we were talking to one of the people from FCT. So FCT is a title insurer, and they handle the title insurance on, I think they're well into like 50% of the deals in Canada. But with that amount of business comes data, and the data they were pushing out there was the sheer amount of clients, people coming up for renewal through 24 and 25, and and what that's going to look like. And that is going to be an interesting thing. Like, you as a realtor can buy and can sell, but as a mortgage agent, I can help with the buy, I can help with renewals, we can do the refinances. So there's a few more lines of business, and that's they handle a lot of switches, which are different than refis for some technical reasons. But the amount of switches that are going to be coming down the pipe is going to be wild through 24 and 25, and the options that are out there. And the bigger FCT gets, one of the data points is the more market share they get, really shows how many people are willing to move their mortgage from one lender to another, whether it's a big bank into the broker channel, which is where they get the majority of their business, I think. So it's showing that people are looking for a better deal, want a better deal, and are willing to do the work, if you will, to get a better deal. And there are some better options in the broker channel. So that's going to be an interesting thing to watch over the next 18, 24 months,
So
is that business.
the switches are going from one lender to another lender.
Yeah, so people say, well, that's the same as a refi. It's actually not, because on a switch, the main difference is that you're keeping everything the same. So you're taking your balance, your current amortization, moving it from lender A to lender B, typically no cost to do that. And and what you're doing is you're not renewing with your current lender. So
Right.
it gives you it potentially can give you better options, better rates, better terms, and things like that. So, but they all have to be title insured anyway, and that's where we're pulling that data from with
Right.
FCT.
Yeah, that's why FCT is there, because they're on the title insurance.
Mhm.
I had a conversation in the past about if you have a house that you've been in for so long and you don't have a mortgage on it anymore, it might be the case that you don't have title insurance, right? And for a couple $100, you can get yourself some title insurance. So if you're thinking about like a great present for your parents that already have everything and they own their house outright, 40 plus years, a couple $100 will buy them title insurance and prevent against some sort of fraudulent activity that might potentially happen.
The biggest part of her conversation today, of her talk that she gave us, over 50% of that talk that she was talking for about 45 minutes, was all about fraud. Like, the sheer amount of mortgage fraud that goes on in Canada, not to talk bad about our country, is absolutely insane. Like she was saying, she's like, for $5,000, you can buy a printer, like a good printer that will print all the holograms and stuff on your passport, just like your passport would. So she's like, fraudulent documentation is wild, and it's crazy how smart and how knowledgeable these criminals are. So as much as it might sound, what you said might sound really boring and crazy to people, it's true. Like, there's countless stories of people having their homes sold out from underneath them and are stuck with a mortgage that they didn't even do, right? It's crazy what's out there, for sure.
I looked into the cost of what it might be to get title insurance on a house, and it's based on the appraised value. I think it's like 0.11% or something. Like, it's so, like, so you get your appraised value of your house at $500,000, it's going to cost you $500
Mhm.
with title
Yeah,
insurance.
and it protects a laundry list of stuff, right? So I mean, obviously, from our conversation, it protects people against fraud and fraudulent activity. But there's a laundry list of stuff. Like, I mean, it can go as low as just a lot line dispute, right? Like, one of the stories I have is, and it was just coincidentally, it was when this gentleman was working for a title insurer. His parents' house, they were putting in a pool, and they put the pool in based on the survey that they had. and that was fine. And one day the neighbor came over and was like, "Why is your pool in my backyard?" And they're like, "It's not your backyard. Like that's our square, and we put it in our square." And he goes, "Yeah, but my survey says it's a trapezoid or whatever that shape is." So you literally, if you were in the diving end, you were on his yard, and you dove in, and you ended up on their yard, just because the way the survey goes. And they're like, "How did this happen?" And that's the thing. We don't know. I don't know. The survey guy was drunk or somebody screwed up like with the marker somewhere. Like we don't know, but that's what happened. Title insurance came in and fixed that line and made sure everything was good, made everybody whole. And that's it. Without title insurance, that would have been an absolute disaster.
I
So
guess
it's something like as simple as that that it can protect.
making that guy whole probably looks something like giving money to the trapezoid guy and say, look, you're not using the space. Obviously, here's the pool, here's the fence. You're losing this amount of space, and we determine that it's worth X. Here's X from the title insurance company. Thank you very much. Move on with life. Now I can dive from my own pool in my own backyard into my own pool in my own
And
backyard.
here's your new survey, right? So you didn't spend $1,000 or whatever it cost you to get that done. There you go too. And now there's no question when you sell the house down the road, rah rah rah, for sure.
Yeah, okay. Yeah, that makes sense. Yeah, a lot of the times on our back end system on Geo Warehouse, we've seen some stuff that gets funky like that, right? Where listen, that land people can register a title. There's land registration titles that you can go in and you can register it. And if you know the lawyer or the law clerk or whoever is doesn't do it properly, it comes out looking a little bit weird or a little bit funky. And it's, it's the same with us on MLS, garbage in, garbage out. If somebody gets it wrong or does their job incorrectly, it has a long-term and lasting effect. So yeah, we'll jump in the second half to talk a little bit more about what we saw in 2023 instead of just getting into predictions about 2024, but what we saw year in review sort of thing in terms of 2023. And we'll take a quick break with a word from our sponsor, Magic Mind. So I'll tell you guys a little story about using Magic Mind so far. So, but stay tuned for after that in the second half where we talk a little bit about what we saw in 2023. As always, hit that like button, subscribe to the channel, share this with someone who you think is interested in this type of content as well. If you're listening on Apple Podcasts or Spotify, thank you very much. And we'll see you on the flip side. So guys, I tried Magic Mind for the first time. I've never tried it before. It is a mood enhancer. It's going to help you with your productivity. It's already helped me with my productivity. It has a bunch of cool stuff in it, nootropics, mushrooms in it. It's got matcha. It's got a whole bunch of really cool things in it. And I kind of don't really care what's in it so much as what it has done to help me out. And what I've done now, I've taken it, I'm just on my day 3 right now as I'm recording. I find my headspace to be a lot more clear. I found that I was able to get a lot more done. So we moved into a new space. You might notice the background here looks a little bit different. The lighting is a little bit off. I got to get new lights going and stuff like that. But what I found is that the first day that we moved, I didn't take any. And the move was just a jumble. We moved stuff down here and it was all sort of willy-nilly. On the second day, I came in to do setup and I was really able to get everything set up in its own place. And instead of being scattered and all over the place, I've got ADD, I was able to say, okay, this area, I want to get it done. I want to get it looking like this. Boom, I was able to do that. This area, I want to get it done. I want to get it looking like this. Boom, I was able to do that. And it just really felt like my brain was able to find the right space for everything. Like there was clarity in my mind, and as a result, there was clarity in my experience. I took it with coffee. It was really easy. Tasted a little bit like I used to go to Booster Juice and get these little wheatgrass shots. It kind of tasted a little bit like that. So you down it, you have a coffee, don't really notice it, but my mind really feels apt, like it's there. I'm right there, right in the front of my mind. I'm able to process things better. So in January, Magic Mind is actually having a promotion where if you get 3 months worth of the Magic Mind, you can crush your goals. They'll give you 1 month for free. We're also offering a discount code, Real Collective 20. We'll post all of that information below, but try it out, Magic Mind. I would say, Kyle, you're on day 1. You need some more consistency.
Yeah, I'll get the consistency going and update you on the next one for sure. Because I have tried it. I did like it the first day. So I just want to get the consistency going to make sure that I can give you an honest feedback for it for sure.
Yeah, and so if your goals are in 2024 to do something better, to use your mind, absolutely want to check out Magic Mind. Like I said, the discount code is Real Collective 20. Of course, that will help us out as well as help yourselves out. So yeah, thanks for checking us out, and we'll catch you back on the flip side. Welcome back, you beautiful people, to the second half of the Real Collective podcast. I hope you enjoyed that infomercial from your sponsors, Magic Mind and yours truly. As always, hit that like button, subscribe to the channel, and share this with someone who you think might be interested in this kind of conversation. We're going to look back at 2023, and what did you find, Kyle, was sort of I mean, if we're going to talk about words, the word for 2023, or your experience of 2023. You've been doing this a long time. How is 2023 different from some of the past years, and how can you sort of encapsulate that in a hit me with your thought.
One word: compromise. Like that was legit what I literally tell clients all of 2023 was no matter what you're doing with in terms of real estate and your mortgage, you're going to compromise something. So if and that was everything. Like I said, there was people who were compromising on location. There was people who were compromising on price, payment. There were people compromising on not buying at all and waiting. Pushing that back. Everybody had something to compromise on. Gone were the days of, and are gone the days of, I got a low rate, I got a low payment on a nice big house that I love to death and I'm never moving from. That's not happening. And I don't know that it will happen maybe ever again. We are back to stepping stones. We're going to take this house now because I believe in real estate and I can afford it. I'm going to upsell. I'm going to sell up later and we're going to move in that way. And we're compromising with that. Or I'm going to move farther out of town because I have to be able to afford it better. So I'm compromising there. So definitely compromise was the word.
That's a good way to look at it. If I look back at 20, I haven't come up with a word for last year, and you're going to ask me what was your word last year. I think it was something like health or healthy or something like that. Go.
What was your word
last year?
Yeah.
I think at the beginning of the year it was something like health or healthy, like the same as my radical word. I think last year was my word for the market. If I had, like, you picked a great word for compromise. I think that's a wonderful word to choose for 2023. I would say, boy, 2023 was the kind of year where I was banging my head against the wall. Like, it just felt like it was not easy. It was hard. Nothing came together as easily as it had in the past. And I think consumers needed to have an agent who knew what they were doing if they were going to put something together. Every deal that we put together was a struggle, was a grind, was an effort. So, I think if I have to look back at 2023 and give it a word, maybe I give it the word effort, because it really was a push to get stuff to happen. Um, not that it was making people do things that they didn't want to, but like, we really had to be collaborative with the other agents. We had to come up with solutions, out of the box thinking. What if we do it this way? What if we do it this way? Oh, I don't want to pay that money. Okay, well, what if we can do this? I don't want to accept that deal. Okay, well, what if we can, what else can we do that it's not just about the money, it's about, okay, well, how do we work this out? What is it really that you want? Well, I really want this. Okay, good. You're tying that to money. What if we solve this, but we leave the money the same? Right? And that's what it always seemed to be. Like, there was always something extra to do. Whereas the years before, it was just like, okay, sign here. This is your house. You want a home inspection? Sorry. Right? Like, it was very, very much a year of pushing, of struggling.
Some of those changes though are good, I think. Like the fact that conditions came back,
I agree.
right? The fact that you could, although you may not want to, but put a condition in for I'm gonna buy a house, but I gotta sell my house first. and having people be responsive to that, not the 2020 and 2021 mentality of, hey, there's 50 other you waiting for this house. So no, right? That was a big thing through that was a nice thing to see. And I agree with it. Every deal, there were very few easy deals to do last year. We were, you know, in general, you're moving stuff around, you're paying off debts to make sure you qualify. You're not getting a full new first mortgage. Lots more ports were happening because rates were so low, but we needed to pay off debt. So we got a second mortgage instead because the math worked. Lots of different things that way. And I think what happened too was it was ever evolving. Like
Yes.
it was never just like, okay, it's January. This is how the year is going to be. January to March was one thing. March to April was different. April to July was completely different from before. August was its thing. The last Q was wild, right? Like the hardest deals I've ever done in my career were December of 2023, straight up.
Yeah.
So it was an interesting year. But I also think that made a lot of us better. And I think it also made a lot of people quit. I
I,
think I think both of our industries saw some attrition happen. If
I
that's the right word.
I agree. I worked with some really great agents last year. And the deals that we put together needed two great agents on each side to make it happen. If there was
Mhm.
one agent who was just kind of like, well, whatever happens, happens, it wouldn't happen, right? Like you need both parties to be good for stuff to come together. And if they weren't, then it wasn't coming together. And I'm sorry to say, but if you're a real estate agent and you're not good and you need to be good to be successful, you won't last, right? Is what it comes down to. You either have to get good or find another job because this next little while, it's not going to be easy, right? So
Yeah, we've got a whole you know um, group, I guess you call them, people in our business that only do specific types of deals, right? Like they're the and there's nothing wrong with that. They have their avatar. That's what they run after, right? Double income, great credit, all down payment. But we're all searching for that, and we're all competing for that type of business. And if you can't branch out and do alternative deals or structure a private deal, or I don't want to use the word convince, but show people that this structure, even though it's alternative, is still better because XYZ for you, right? They have to agree. We can't just force it on them. If you can't do that, your well will dry up quickly in the next little bit because unfortunately the nature of the beast is the fact that people have debt. People are it's tough out there. It's hard to stay afloat. How do we help people do that and manage their money? And if you're just transactional, like, oh, just give me your pay stubs and I'll see what's up without providing anything else, nah, that well's gonna dry up real quick.
a lot of our business, I'd say like somewhere between 40%, maybe even half of our business is working with investors. And they weren't buying a lot of houses last year because the money was so expensive. So it's like, okay, well, are there deals? How do you find the deals? Where do you find them from? How do you push? How do you make it so that, hey, if you're an investor and you need to either buy or sell, how do we make it so that we can make this happen, right? Where are we looking? Where like really just, hey, to find a deal, maybe it's going to be off market, maybe it's going to be pushing in this other direction, maybe it's going to be this zigging when everybody else is zagging, right? You're going in a different direction. So yeah, 2023 was definitely a year where the number of transactions was lower, and they came harder. So if you're a consumer, if you're looking to buy or if you're looking to sell, please, like, don't hire me. That's okay, but just hire someone who knows what they're doing. Um, I do. So, we're hearing now there's a lot of regulatory changes that just hit. And we've talked about them with Tressa and with the realtor cooperation policy. We're going out, we're talking to consumers, we're talking to clients. We're like, hey, how do you want to be treated? Do you want to be treated as a client or do you want to be a self-represented party? Oh, well, nobody else is even asking me. Other agents aren't asking me about signing paperwork or doing any of this stuff or explaining any of this. I'm like, man, don't hire that agent. Like, you know, if they're not even able to have the conversation that they need to have before starting to work for you, what conversation are they going to have when it comes time to signing your paperwork for your $600,000 $1 million property, whatever it is, you know, $2 million property? Is that the person who you want taking care of your financial situation with your house? Like, just hire the right person. I don't care if it's me or not. I mean, I'll put my hand up. I'd like to do it, but you know, just make sure that you get someone who's up to date with what's going on. Don't hire the person who's done 3 transactions in the last 3 years, because you're gonna shoot yourself in the foot. And it might be your friend, it might be your neighbor, it might be someone who whatever is super nice, or I want to support them because they just got into the business. Like, it's a big risk. You know, could be a 10, 20, $50,000 risk, and you think, oh well, they're going to give me a break on this or that or whatever it might be. Well, they might cut you a break now. It might cost you in the long run. So just be.
Well, and it's the numbers too, right? Like you're saying, if someone's, you're gonna go with that person because they're gonna cut their commission and give you a break. Really look at what that number is. Like, look at what that number is. I mean, I do it all the time in our business when people are like, well, I saw you're giving me 5.09, but I can get 504 next door. And I'm like, okay, but have you done the math on that? Like, how much are you saving? Really? Right? Like, I know lower feels better, it looks better, but is it better? Right? I have products that are, I think I mentioned it before, where you'll get a low rate, but you can't get out of it literally unless you die. It says that, like, you have to run the term to the end or die. It, those words, the commitment, and you want that to save $14 a month and have no flexibility. Like, are they reading that? Are you reading? Is anybody reading that to you?
Yeah.
So yeah, it's understanding what those things are and what value they create or what the cost actually is. That's the part.
Before we sign off, I'll give you one example. Is all agents now are supposed to have a Schedule A that goes with their listing agreement or their buyer agreement. And that Schedule A outlines all of the responsibilities and marketing and everything that that agent is going to do for you as a part of your agreement. It was never had to be laid out in the past. Everything now moving forward has to be laid out saying the agent is going to do this, this, and this. These are the things that they are going to do for you as a part of your agreement. I'm at least 70% certain that at least half of the agents, sorry, I'm 100% certain that at least half of the agents who are out there working with clients are not providing that information to them. And it,
100% of the time, it works 70% of the time. Perfect.
all I'm saying, you are a consumer and you're hiring an agent, ask for the schedule of what that agent is going to be doing for you as part of signing that agreement to hire them. That's all, right? That needs to be outlined. Hey, what are you doing for me? You're getting paid all this money. What are you doing for me? That should have been the case before. It's definitely that's part of what the new rules and regulations are now. So
It looks like they've brought it to the point of, like, you're hiring a contractor. What's the scope of work? Like, would you? Yeah, I guess. Would you accept a contractor's quote that said, "I'm gonna do it for this much, and that's it"? What are you gonna do? It. Like, that's what I'm gonna do. I'm gonna do it.
yeah.
Right? What is it? What's the job? What's the scope? What do you do? When are you gonna be here? We do that. It's so funny how we, as people, will just accept certain things, and I'm guilty of it, right? But we just accept certain things and then get real sideways about it when we apply different rules to our thing. You know, it's funny.
I think
Interesting.
overall, I think it'd be great for our industry. But we're over time.
Mhm.
Let's keep this conversation going. I think we're going to have good conversations moving forward because of this Magic Mind. So again, thank you to Magic Mind, our sponsor. Look at how
Yeah.
on point I am. I'm happy about it. As always, hit that like button, subscribe to the channel, share this with someone who you think might be interested in this kind of conversation. If you're listening on Apple Podcasts or Spotify, thank you very much for your ears. If you're watching us on YouTube, then you can see me waving. Schedule an appointment with Kyle and I in the calendar links below. And you can also download the buyer or seller guides in the links below. Also, the link to Magic Mind's discount will be down below using the code REALCollective20. Thanks so much, and until next time, keep it real.
Collective.